Good day, everyone. We're back again here with Magic All Around and with our analysis for the week. It's going to be covering from the 13th of September till the 17th of September. So stay put. We'll be covering many pairs, including the dollar yen, Great Pound dollar, Euro dollar, and we'll have a look as well on the USD Cad. The movement has been quite big here in the past few days. And we'll be covering the gold as well and the US index. So stay put with us. Watch the video till the end. It's going to be fruitful. Do not forget to like, share, and subscribe. Definitely, we'll be having more Forex tutorials in the next few weeks. So, for you who are not familiar with the Forex, how to trade, and they were only following signals, you don't have to do this anymore. Just follow and share and subscribe to our channel. We'll be covering everything for you in this channel. Um, Quite a disclaimer here. This is my point of view. I help you out. This is how we see the market, and usually I make sure that the deals has stop losses because this is quite important. Not to blow your account. Do not forget to manage your money quite well because forex is always about discipline and money management. So, without further ado, let's jump to it. So, first pair for today, dollar yen. As you can see on the daily, dollar yen has been in ranging form. I would say it is more of a triangle. So, if we pull it from here, this is going to be our triangle. This is the first part. And from the other side, let's pull it from here. This is our second part for the triangle. So we've been ranging in this for quite some time now. And as you can see, it's been following the triangle. It has tried to break up several times. It has failed. So to me, I would be selling from this area to the end of the triangle, buying from this area to the end of the triangle. So at this moment, I would be waiting to see what's going to happen next. So I would wait here to sell. Sorry. So let's put that here. So this is going to be our sell entry. And usually I do not put more than 20 pips. So let's measure here. How many pips is that? So if we measure it, here we go. So that's 55 pips, almost 60 pips. So what I would do for such a deal, I prefer usually 3 to 1. So let's say our entry point is here, which is 110.22.6. I would put 15 pips maximum. So in such a case, so let's write this down. So our sell entry is going to be 110.22.6, and our stop loss is going to be 15 pips. So 15 pips in such a case is going to be 110.376. Okay. Now our TP is going to be, as we said 3 times, it's going to be around this area. So I would say around 109.75. 109.75 or even 73. There we go. And we do the opposite. Let's say it dropped. So your entry point is going to be 109.69. So let us put that as well. So let's say we have here. So let me put this. This is going to be our entry point. Again, because we've been ranging, as you can see. And to me, this is lots of money on the table. Because if we are in ranging market, just make sure that you're on the safe part. That's why I put 15 pips, 10 to 15 pips, because it's getting narrower here. So our entry point is going to be 109.70. Let me write this. Buy. Limit 109.70. Then stop loss 109.55. And then profit. So we've got 15.45. So PP is going to be PP is going to be 110.15. All right. That's for the dollar yen. What I would do as well, I would draw a Fibonacci here. This is going to help you to have better entry points. Because, as simple as this, I'm going to draw it from here till here. There we go. This is our Fibonacci. Okay, let me see if you can put it as raise. Extend. Now, here we go. So, this is our Fibonacci area. Okay, so it's been trying to break the 61.8. So, the next level is going to be the 78.6, which shows this is exactly where our entry point is. And again, our buy limit is going to be this area, which is very close to our Fibonacci level, which is the 38.2. Here is it. So again, this is a very good entry point. So this is exactly where do we stand regarding the dollar yen. So if you're not familiar with the process, this is one of the good entry points for you and to be on the safe side as well. All right. That should be all for the dollar yen. Let's jump to Great Pound Dollar. So, Great Pound Dollar. There you go. Here we go. Let's open the Great Pound Dollar. The Great Pound Dollar as well has been in a downward triangle. So, if you draw it like this is our triangle. It's getting rejected as well. Let's pull this one. So let's take this one. So this is gonna be our horizontal line. There we go. So actually people who have entered in this area, this is the good area for entry. They're in a very good position. Because as simple as this, as you can see, it's a downward triangle. It has been rejected several times, and we're getting rejected since the 29th of July. Again, I would wait here for a good entry point and then drop. So our set entry point is going to be here, which is going to be 38.24, 38.25. So let's put that. So set entry 1.3825, stop loss, I would say here 20 pips, because the movement of the Great Pound Dollar is quite higher than the dollar yen. So technically, it's easier to make 3 times the number of pips here to your loss. So if you have 20 pips, so you'll be making 60 pips in return. So I would put here 1.3845. Notice that we have reached today the 38.45. So if you want to push it a little bit higher, that's what I always do. I push it a little bit higher, like around I would say 10 to 15 pips, or I would wait for the day to close and then go here, which is gonna be tomorrow. So this is preferred, which is gonna be on Tuesday. This is more preferable. So stop loss 38.45 and TP in such a case. So we're looking at 60 pips. Now, let me teach you another trick here. So as you can see, I love Fibonacci. You've noticed this. So I would draw my Fibonacci from here till here and wait for it. So here we go. So technically we are at that 61.8 again, which is really good. So our first exit point is gonna be this area, 37.85. Okay, so this area is around 40 pips. Is that enough? No, because we're looking to have 60 pips. So 37.44, I would take it here. 37, around this area, 37.57. So this is how you put your TP as well. Because if you cannot do this, you won't be able to make money. Alrighty? So let's get back to it. So let's fix this. Sorry. Here we go. So it's gonna be 1.3757. Here we go. This is our deal for today. This is for the Great Pound dollar. All right. So as you can see, as long as you put the right lines, you'll be able to trade better. Because without that, without having the right borders, you'll be losing money. So why put yourself there? It's pointless to put yourself there. You will be wasting money. You won't get anywhere. So if you do not have a good entry, do not enter. It's pointless. If you do not have a good entry, do not enter. It's pointless. Again, so people do not jump into a deal. All right. I would be moving my stop loss actually, because this area, the 50, usually is not that strong on the Fibonacci, but I would watch out here. That's why I've put 37.69. It's quite a good exit point as well, and maximum would go to the 37.57. So this would be the best area for you to exit, because the 38 area it's gonna be the toughest to break. As you can see, it has been the price has been trying to break it 1, 2, 3, 4. So it's quite tough to break. Now let's jump to our next pair, the euro dollar. Let's see, where does it stand? Euro dollar. There we go. All right. What do you see here? Is it ranging? Is it a triangle? What is it? Again, we are in a ranging market. Yeah, it's a quite bigger range, but we're still in a ranging market. So to us, on this point, I would draw my Fibonacci again. And here we'll be trading only off Fibonacci levels. Okay, so let's zoom out a little bit just to have a broader look. Technically, we're in downward trend, but it's not yet fighting it. So if we zoom in. So I'll be waiting around. Again, we said the 50 is not that strong, as you can see. So 60 was a good point to sell. So I would wait here again and get out. Watch out for the 50 level, but this is going to be my target. So here is my entry point. This is a very good entry point as well. So I would say around here. Stop loss again is going to be 20 to 15 to 20 pips. So this is 1806. Okay, this should be a good entry point. So let me write this again. Here we go. Sell entry 1806. 1.1806. Stop loss 1826. TP is usually 60 pips. So it's going to be 1.1746. Got it? And then we'll watch for the price action around here. I would buy here, put a very tight stop loss, but again, I would not buy from the first time of testing. I would wait for the second or third time, just to make sure that it is rejected. So we don't have to rush into the deals. We have to make sure that it is rejected first, and then enter the deal. Then never jump into a deal without a confirmation and without a stop loss, because this is the only thing that's going to blow your account. Even when if you're trading with full margin accounts, like what you see online, flipping accounts, so on and so forth, even when I do this flipping accounts, and you will be watching videos about that as well, I move with very tight stop loss. My stop loss would be around 7 to 10 pips. That's the maximum. See? So even with flipping accounts, no. I have to wait. I have to make sure that it's a good entry point, and not to mention that my stop loss should be handy with this. All right. So next pair, it's going to be gold. Yep. Lots of you go to it. XAU, our gold spot. There we go. This is not our gold spot. So where is our gold? Gold. Nope. Maybe because I'm picking. Here we go. Because sometimes with TradingView, when you're picking a specific thing, it doesn't give you what you're looking for. So let's check the gold. Yep, here is it. So let's open this. Perfect. What do you see here again? That's the first thing. So if you've been trading for some time now, first thing to do is check, what does the market look like? Is it ranging? Is it an upward trend? Is it a downward trend? Always make sure that you know where the market is moving, because if you are in an upward trend and you're looking to sell, it's pointless. You're going to blow your account, even if you're putting a stop loss, because as simple as this, the market is giving you a sign that I'm in an upward trend. Why are you trying to catch a rocket here? Same goes for the downward trend. If the market is falling, do not try to catch a falling knife. Even if you're going to collect 10 to 20 pips, it's pointless. It's going to be very risky. You're risking the account for what? For 20 points? For 30 points? It's pointless. All right? So, this is our ranging market. As you can see here, it has been trying to break this one. There we go. And it's failing. Same to goes for this area. And the short term, we've been trying to break this area since the 16th of August. So let's put this here. There we go. So we've been in this part for so long. What would you do? Wait. Wait again for... I drove my Fibonacci here. So technically, I'm in a very critical area. Because if I'm trying to see what's going to happen, let me draw the Fibonacci in a better way. Here we go. Go. Yeah. Here we go. So why did I draw it this way? That's a very good question. As simple as this. If the market is falling, or you're expecting the market that it's going to break to the downside, this means your 100 should be on the bottom. So always remember it, and this is going to be covered in our free course. All right? If the market is falling, you draw your Fibonacci at the bottom. The 100 is at the bottom. Because as simple as this, if we break this area, this is the area if we might break it, this is where I'm expecting to take my profit. 1748. All right? If we do not break it, then I know that these are the levels I'll be watching out for. So at the moment, it is playing around the 70, so the 1790, which is going to be this 786. Okay? And then the 61.8 has been trying to break it to above, as you can see, 1, 2, 3. So this was a confirmation because, as I told you earlier in this video, if you find a rejection first, second time, you jump in on the third time. This is where you jump in. You wait for it and you jump in. So in such case, some of my accounts, I did that to it. So I am investing for others, and they get their profits on quarterly basis or biannual every 6 months. And this is exactly what I jumped in. I jumped in, I put a very tight stop loss. And remember, in gold, every pip is equivalent to 10. So let's say your entry point is 1791 and it dropped to 1790.34. That's 10 pips. That's not 1 pip. Because in gold, it is 10 times. You're trading like a standard lot. Okay, so put that in mind, especially when you're entering a deal. So you cannot put the same pip value like what you do with the Great Pound Dollar, with the Euro Dollar, because 0.01 here is 10 cents, right? If you have your pip value here, 0.01 on the Great Pound Dollar or the Euro Dollar, it is 10 cents. But 0.01 on the gold, it's totally different. It's going to be $1, 10 times the pip value, the normal pip value. So to me, going back to the gold, I would wait around this area. Okay? So this area is going to be 1778. And if I get a confirmation, do not jump in as soon as the price breaks. No, wait for it. It has to retest it. Got it? So if it breaks here, wait for a retest at the 1778, then jump into the deal. So our entry point would be sell entry 1778.87. This is the price I got from Fibonacci here. All right. Stop loss 1798. So in such case, I need double that. So I would go to, no, I would move it actually to 10 pips, because if we have a confirmation on, it's the best thing. 1788. And then our TP, take profit, is going to be 1748.22. Got it? So this is 30 pips, and my stop loss is 10 pips. So technically, 10 pips is going to be 100 pips, and this is 30 pips, which is 300 pips. That's my view as well for the gold. Now, what if it does not break? So we're going all the way up. This is going to be how it goes. It's going to be going all the way up. So it's going to be, let me put this. It's going to be going all the way up like this. I would say around this area again, because it's been hard for it to break it. So if we do not break here, we're going all the way up. This is important for you to note. Got it? Let me remove this. It's not getting removed. That's fine. That's for our gold. So what would be our entry here? What is going to be your entry point if it does not break? Very simple and easy. So we, as you can see here, 1, 2. The third one was the good entry point. So we wait. So if we're waiting, there we go. If we're waiting, let's move this one here. So we can put our entry point here. So if we are waiting, this is gonna be, if it does not break. Again, I have to stress on this part. So you do not jump in from the first time. Wait for the second time to get rejected. On the third time, you enter the deal. So before the third time, it's pointless. You'll keep watching. There is no reason for you to jump in before the third time. So entry is going to be same price, 778.87, and this is our buy entry. There we go, buy. Same way, stop loss 1788.87. Okay, and TP, in such case, we're looking here. So we're looking around 1803 to 1810. I would wait till 1810. 1810 point. All right. And it's always better when you see the market has moved already 20 to 30 pips, move your stop loss to break even, just to be on the safe side. All right. Managing your stop loss will always limit your losses. And I'll show you how is that done on the next pair, because we had several scenarios last week, and the best thing was to manage our stop loss. Other than that, we would have lost the account. Not lost the account, let me put it in better words. You would have lost your profits here, or lost a big amount of your profits. All right, so the next pair is going to be USD Cad. So USD Cad, this is exactly the example of managing your profits. Okay, so what do we see here? Is it ranging market? What is it? So this area has been quite hard to break in the near future, so in the near past here. So it's going to be on the 11th of August, right? And this has been the area where it has shown uh, earlier high. So to me, I would look at this area to be the vital one. This is the tradable area. So let's put it this way. Fibonacci, always look for the highest swing and the lowest swing. All right. So what do we see here? It has been trying to break this area, which is the 23.6. It got rejected, and it's been trying to stay above the 38.2. Then it tried to break the 51.8 and the 61.8. So where was our entry point last week? Our entry point was here. And we were looking to get our profits here. So what happened is that on my accounts, the entry deal was the 1727 1.2700. Okay? My stop loss, I did not trade on that day because there was major news on that day. So you do not trade on the days where there are major news. Although it might be the perfect entry for you, yet your stop loss might be hit because of the volume being traded. As you can see, if I had here the 1700, because my entry was 1.270 and my stop loss was 1.2740. If I did this, this would have been blown. As you can see, we've reached even the 2760. I traded here. So my entry was 1.270. My stop loss was 2740. The price dropped, and then my exit point was the 25. It was 2587, not 2593. It was a little bit below it because this is where you have your indicators. Now, if we put here the moving average, it's one of my favorite ones. And please make sure to follow, subscribe, and share, because with me you would see why the entry points, why the exit points, and as you can see, even the stop losses. So I try to make sure that you do understand how to do it and why to do it and the best entry and exit points. So let's check this one. So this is exponential moving average 9. My exit was 200. So let's check the 200. So the 200 was here, right? So why did you put it below it? Correct? If we check the 4 hours, this is exactly where we got. So my exit point was 2587. So how did I manage the deal? So when the deal dropped, this is exactly what I did. So I waited for the market to retest here. and then it dropped. Then it made one last retest here. Okay. And this is where I moved my stop loss to break even. Then when I saw this drop, I moved my stop loss to plus 10 pips. So my stop loss, instead of being 2740, it was moved to 2690. So whatever happens, I'll make 10 pips in profit. And if you think about it, if your stop loss is getting hit each and every time, you're still making 10 pips out of the deals. So the moment you see the price drops more than 20 pips, move your stop loss to break even. And then when you see it dropping to more than 20 pips, like around 40 pips, move your stop loss to plus 10 pips. As long as you know where you will be exiting, because in this scenario, this is my exit point. So this is the exponential moving average, the 200. And as you can see, we rebounded off this. The next time we will be touching this is going to be with huge volume. So why was I expecting this? Because as simple as this, we broke here, we did not retest it. Remember I told you we have to wait for a retest. If you do not have a retest, then you're jumping into a deal that you do not know, or you're not aware what's going to happen next. All right? So to me, people who have entered here, it was gambling. Yet people who entered here, they were not, because this is a test. This is another retest. This is where you enter. So in such case, you have very limited stop loss. I would say around 10, 15 pips, maximum 20 pips, because the movement of the USD Cad is quite big. So this is the maximum you should do. All right. Now we're still facing here rejection, correct? So should we trade this pair? Should we sell at the moment? I would wait, because this is one, this is two, this is three. Okay. Yes, this is considerably a good point. But since we're starting the day on Monday, I would wait for one last retest here at the 2684. One last one. I'll have to make sure that everything is accurate. So this is going to be my entry deal for the Great Pound. And a quick advice. I wouldn't enter at the 2684. I would enter again at the 2700. I'm kind of greedy at this point, because if we are retesting it, it's going to be the last time. There's always more volume. So I would wait at the 2700. My stop loss would be 2730, not 40 this time. And my TP, in such case, first take profit, is gonna be 1.2587. My second TP, there we go, is gonna be 2446. 1.2446. Why is that? And remember, this is really important. Now, I said that the next time we'll be touching the 200 moving average is going to be really strong, correct? So, what I see, this is how I see it on the market, it's going to break this one. And it's going to break it really hard. And it's not going to retest in the near future. So, it's going to make a lower bottom. Now, let's check on this. Let's go to the daily. Here we go. This is my exit point. Second, this is third. Okay, this is my 100. We did not retest the 100. We did retest this area. So what I would say, I would this is the first area where I said I'm gonna be collecting my profit. It's a very good entry point. It's gonna get you lots of profits. This is the area where I'll find lots of volume, and since we tried to break it several times, the next time we'll be moving here is gonna be really strong. That's why I am exiting here at the 100, and I would wait. If I zoom out to see my extension, there we go. This is my extension, 2200. Are we expecting to reach this area? No, I do not expect it at all. So where am I expecting the price to drop to? This area, 2433, and maximum I would say 2402. This is the maximum I'm expecting the market to go to, this area. Okay? So this is the maximum I'm expecting the market to go to. Do not know. Okay. Let me change this brush. So this is the maximum I'm expecting the market to go to. So for you who want to buy a swing in such area, this is a very good area to buy your swing. But in such scenario, make sure that you put again your very tight stop loss. Without your stop loss, you're gambling. And I do not want you to gamble. Gambling on Forex is not going to get you anywhere, even if you're lucky in life. I'm a person who's lucky in life, yet when it comes to Forex, it's really hard to be lucky. If you get lucky once, twice, the third time, the market is going to drop you. The market is going to make you lose your account. And it's not doing that on purpose on a personal level to you. No, 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 no. It's just that you are not aware of the major movements because there could be news, there could be a political situation that you're not aware of. And if you're not following closely what's happening around the world, then the market will definitely blow your account. So avoid this. Like in the pandemic last year, last March, 2020, if I didn't have my stop losses there, I woke up to a loss of $1,000. And thank God that I had my stop loss there because the price actually dropped 200 pips below that, which was equivalent to, if you can imagine, $6,000. So I blew out around 35 pips only, which is perfect. If you think about it, it's absolutely perfect. You blew $1,000 instead of waking up to $6,000 or more. So do not push yourself there. Trust me on this. I've been doing this for the past 15 years, and it's absolutely useless not to trade without stop losses. Now let's jump to the US index. US index. Is it? Why is it not showing here? Okay. Ooh, let's go. Lots of people are trading the US 30 as well. It's one of the good ones to trade because I know lots of you sometimes are looking for quick profits or a pair that is really moving quick. I do not recommend trading if you have a small account to trade on fast, what is it called? Fast moving pairs because it's going to be easier to hit your stop losses. So what I do recommend is that trade on the slower ones. I would say euro dollar, dollar yen. These are like the best ones. If you want to pump it up a little bit, I would say on um, Great Pound Dollar or Australian dollar to US dollar. So here on the daily, again, we were in, this is very good point for today. So on the US 30, we broke the range. Let me zoom in this for you. Here is it. Okay. So we broke the range. It was ranging from here till here. And it's been trying so hard to break it. We broke it. So people who have entered here, jumped into this. It's pointless. We will wait for a retest here. So our good entry point is going to be the 34818. Okay? This is where we enter. The first exit point is going to be 34,322. So if you put this, sell entry, so it's going to be this one, 3483, 3483, and then stop loss G503, then TP is gonna be G4322. 34322. Check this again. 34830. Got it? Do not jump in from the first test. Jump in on the second retest. Got a rejection? Enter. Put your sell entry. Put your stop loss. Put your TP. And you're good to go. You'll thank me later for this because you do not know how valuable is the stop loss and your TP to know exactly where you stand. Fibonacci will be covered on my channel in details, how to use it, how to read it better, how to put the right entry points, how to move between the 0 to 100, which are the levels that are harder to break, which are the levels that are easier to break. Everything is going to be covered on my channel. So make sure again to like and subscribe and share it with others because this is knowledge. Knowledge is power. And if you know what you're doing exactly, the percentages of you blowing your account, because lots of us do this, are gonna be limited. So the percentage of you blowing your account is gonna be limited to none. It's okay to hit your stop loss. You can never ever be 100% winning because as simple as this, if someone told you in Forex that they have a 100% winning rate, tell them in their face you're lying about it because nobody is having a 100% winning rate. If you're having 60 or 50% winning rate, think about it. You're blowing what? Um, let's say we have 20 deals and 50% of it you blow the you hit your stop loss. So 20 multiplied by 10, what did you lose? 200 pips, correct? Now, the other 20, because we're saying 50% loss here. So the other 20, you made profits on them. And your average is always 3 to 1, correct? So if it's 3 to 1, you lost 10 pips, which is 200 pips. But on the other hand, you won 30 pips multiplied by 20, which is 600 pips. So overall, you're in profit of 400 pips. See? Even with you losing 50% of your deals, you're still winning 400 pips, which is double what you lost. That's why I always stress on that point. It's okay to lose. It's totally okay to lose. If you do not lose, you will never understand how it's done. So it's okay to lose half of your deals and you will still be in profits double of what you lost. So you covered what you lost and you made extra 200 pips. In my channel, I'll be covering even what is the right pip value to your account. So if you're trading with $100, you're starting with $100. If you're starting with $1,000, if you're starting with $10,000, again, I'll teach you how to manage your account. All right, the right pip value, the right stop loss, how much is you're losing in percentage, how much you're gaining in percentages. This is all going to be covered as well in my channel here. That's why I'm always stressing on the part that subscribe, like, and share, because this is really valuable, and you will know its value when you start learning more, when you start following me more on the amount of information I'll be providing you online. Now, last thing we will be covering for today is going to be the Australian dollar. So let's jump to the Australian dollar, USD, okay, here we go. So, see, one retest, second retest, it dropped. Did we miss our point here? No, we did not miss it. So don't worry about it. There's always a new chance each and every single day. So if you are thinking that, oh, I did not catch this, you're mistaken, my friend. I guarantee you this. You're mistaken. Do not rush into a deal. Now, where do we stand here? As you can see, it's not quite clear when it comes to the Australian dollar USD. And technically here, we do not have a swing, which is going to be really hard for you to draw your Fibonacci. So what do? We draw a better Fibonacci, a better swing. We look always for a better swing. So in such a case, since we can see it's a downward trend, so this is going to be my entry, my 100 and my 0. Okay, so there we go. Perfect. So technically, it rebounded around the area where there was the extension. If I pulled it a little bit down, let's say, because some of the people do trade like this, and if I pull it here, this is going to be exactly where do we stand. Okay, but this is not how I like it. Okay, this is not how I do it. That's why I prefer the other one, moving it here where the candle closed and moving it here where the candle closed. All right, and if you can see, this is going to be like support zone, right? And this is resistance zone. So if you follow, check my video on support and resistance and trend lines, this is going to be really helpful for you guys. Okay, so technically, yes, it did break below it, and then it rebounded all the way up. So for people who jumped in here, lost their money because it rebounded all the way up, and they did not know where it was going to go. All right. Now here was a good entry point, sell point. To me, I would have exited here and waited. This was another good sell entry point, and then the drop again. Here you should check one thing. Since it's not clear, so you need to put more indicators. So I would go again to the exponential moving average. Where is it? Yeah, EMA, and I go this one. So this actually draws several ones, if you noticed. So it throws 20, 50, 100, and 200. Okay? So the 200 is here, and this is another one. This is the 100. Let me remove this so you can see it better. Now, this is our 200, right? It says here, EMA 200 close, which is exponential moving average, and it covers 200 candles, and it depends on the time frame you're working on it. This is going to be as well covered in my course or my material on my channel. Now, if you want to get in depth and to be a really experienced one, make sure that you contact me on my page. And because we have a detailed course, it covers you for 1 whole year. So you take 6 months of tutorials covering moving averages, covering technicals, history of Forex, fundamental analysis, market analysis as well. And this does not only cover you for Forex, so it covers you for stocks and markets in general, whatever it is. And I'll show you an example in my next videos that it covers everything, and our technical covers everything. So going back to this, so what do? You're gonna put here, let's check our 50, EMA 50. Where is it? Yep. So this is EMA 50 and 200. Since we have the 200 already drawn, so we don't have to worry about it. So it's getting rejected here. This is our 50. So this is exactly where do we stand. So we got rejected once, twice. What do we say? We always jump on the third time. Always jump on the third time. To me, since it's starting a new week, I would wait for another retest. So new week, new page in life, and traders tend to retest levels on a new week. It's like, okay, it's a fresh start for the week, so why not push it again? Maybe we can break that level. So to me, I would wait again here around this area, 7386, and then this is where I will have my sell entry point. So here we go. Sell entry point 7386. Stop loss 20 pips, 0.7406. Right? Here we go. And my TP here, we have 20 pips, correct? It's always 60 pips. But is it going to be 60 pips in such case? No, I'm going to push to 120 pips. So it's going to be around this area. Let's say here, 7266. 0.7266. Because technically we did not retest this area. This is going to be my first TP. And then my second one is going to be the extension exactly. Second TP is going to be this one, which is going to be 0.7165. 0.7165. That should be all for today. So we covered most of the pairs, the major ones here.